Right now, it seems like the global economic is going to collapse. How are the investor, individuals, and companies should prepare themselves?
Well, I'm not sure it will collapse, but I think sooner or later, say maybe in 3 years, maybe in 10 years, maybe in 5 years, who knows, we don't know, there will be a systemic failure. Now, I happen to believe that if you have money on deposit with a Thai bank, it is much safer than if you have it with Citigroup or UBS or Royal Bank of Scotland and so forth and so on, because the Thai banks don't have a huge derivatives portfolio. You understand? JP Morgan, they have trillions of dollars, trillions, not billions, trillions of dollars in derivatives. Nobody knows how to value this garbage. So at least if I have a deposit here with Thai Farmers Bank, or I do business with Siam Commercial Bank, I'm a good loyalist. So I think that that deposit is relatively safe, relatively. But you know, if you take the view as an investor, you should always think, I don't know anything about the future. This can happen and that can happen. So in my view, we can make assumption. We can say, okay, they will print money. Maybe it will be successful and maybe not. The assumption that you also have to make is that markets will always go up and down, not only up. Nothing goes up forever. So there will be always an adjustment on the downside and so forth. So if we talk about you know, the global economy slowing down, we can assume that interest rates will stay at zero for a long time. And then we can assume that interest rates in real terms, in other words, you have now on bank deposits in the US practically zero interest rate, but the cost of living is rising, and that is depends on each household at between 3 and say 10% per annum. I would say on average, most people, they have increasing cost of living of say 6% per annum. In New York, they just increased taxi fares by 17%. The tunnel fare between New Jersey and New York increased by 50% earlier this year. So a lot of costs are going up. So in short, you have negative inflation-adjusted interest rates. So if you keep your cash at 0% for the next 10 years, your million baht or $1 million in 10 years' time will buy less because there is price increases in the system, and so the purchasing power of your money will go down. In terms of equities, in my view, in an environment where the central banks print money, equities tend to adjust on the upside. But irregularly, as you know, in America, the market is still lower than it was in 2007. And it's about at the same level it was in year 2000, 12 years ago. In Europe, most markets are lower than in 2000, in other words, 12 years ago. In Thailand, Indonesia, Philippines, if you measure it in dollar terms, because in 1997, 98, we had a big devaluation. In dollar terms, these markets are about the same as they were in the 1990s. So stocks, stocks do not always go up and can, for a long time, move sideways. But as I said, in Thailand, at least you have the dividend.
Okay.
So you get a dividend of, say, on my share portfolio in Thailand, say 5%. So I can wait. I don't need to worry. Every year I will cash the 5%. So in a way, I would say some money should be invested in equities. Then I don't trust paper. In other words, this whole financial sector is vulnerable to a big setback. So I also want to have some real estate, not only in Thailand, also in other countries. And then I have some corporate bonds. These are bantabat, issued by corporations. They have also a yield of, say, 6%, 7%, depending on the quality. And then I have some gold. So, you know, you have a diversification of different assets.
During the past weeks, we have been talking about there's a change of people raising up the idea of changing the main currency from US dollar to Chinese yuan. What are your views on that?
I think that until, say, around 1920 or even into the 1930s, the British pound was essentially a global currency. It's no longer a global currency. And after, especially after World War II and Bretton Woods, the US dollar became kind of the leading currency in the world. And I suspect that if you look at the shift in the balance of economic power that has occurred in the last 10, 15 years, and that will continue to occur in the next 10, 20 years, whereby the share of G7 countries, Europe, the US, and Japan, as a percent of the global economy is going down, and the share of China and other emerging economies, notably India, Brazil, Indonesia, Russia, and so forth, that share is going up, then I have to say that the role of the US dollar will obviously diminish. It will not be as important a currency. And I personally, I don't trust the US dollar for 1 second, for the simple reason that they can print money. If you look at the purchasing power of the dollar, what $1 bought in 1950 and what $1 buys today, no value anymore. You know, so I think we have to be very careful with believing in paper money. The same. If you bought a piece of property here in Bangkok or in Chiang Mai 30 years ago and today you would have to spend maybe 30 to 50 times more. So I can say, okay, the property price has gone up. But I can also say my property here in Chiang Mai, just outside, is the same as 30 years ago. Now it costs 30 times more than in 1980. So the purchasing power of money has gone down. Cash buys not the same quantity of anything compared to, say, 30 years ago.
What are your views on the future of capitalism?
Argue that the crisis in 2008, 2009 came from a failure of the market economy, from Talatseri. But I have a different view. The crisis in 2007, 8, 9 came about because of previous expansionary monetary policies that allowed in the Western world the total debt, household debt, corporate debt, government debt, to grow disproportionately large to the economy. So the systems became over-indebted, and there's always a limit to how much debt you can take. I'd also like to point out what frequently is overlooked in the discussion of credit, which can include education if it's carried out properly, or whether it's used for consumption. If you use credit for consumption, you essentially advance consumption that would have taken place as a result of savings at a later date. So once the household debt goes, say, we have a household, no debts, then we borrow more, and one day the debt is up to here. The banks, and nobody will give us any more credit. And because maybe of a recession, we can't pay the credit. Then we can't borrow anymore, and then we have a recession. And that is an important consideration. So it is not that the market has failed. That people should understand. The failure came from manipulation of the rate of interest by the Federal Reserve and not paying attention to credit growth. And we had some institutions like Fannie Mae and Freddie Mac in the US that distorted the market. And interventions of the government in the economy also led to the crisis. So I would say, looking at the pattern and the power some people have in arguing, now we have a problem, more money printing, and we have a problem, larger fiscal deficits. In other words, the government should borrow more money and spend more money. I believe that there will be a crisis of capitalism, yes, but not really capitalism. There will be a crisis brought about by the interventions in the economy of governments. I think one day people will wake up and say, well, actually, why do we have a problem? Is it the failure of the market or the failure of governments? Whereby I have to say, here in Asia, the governments are relatively clean, because as a share of the economy, they're relatively small.
If you could suggest investor of the proportion of the asset allocation, like how many percentage should they invest in gold, in equities, in bond, in properties?
Yes, I mean, okay, everybody is different and you know, has a different age and has different obligations in life and so forth. I would argue for the average person, I would have about 25% in equities and 25% in real estate and 25% in corporate bonds and about 25% in gold.
So exactly
roughly. Now I also add 25% in cash, because I have similar accounting like the US government.